Hi, good morning, Ross McInnes, Sydney, 10 a.m, June 2nd. Thanks for joining us. Markets have opened June volatile, as they have been through May. This was led last night by more concerns about the Euro banking system. We saw some news last week that maybe the banks were having problems borrowing from each other, or they weren't prepared to lend to each other. And this kept the market volatile last night. The Euro USD rate, which has been the focal point of global markets over the last 3 weeks, falling to 121.10, new 4-year lows, versus 121.20 this time last week. But the market again found support down there and recovered overnight, but extremely volatile through the New York session as well. We had the important US May ISM manufacturing index, which is a leading indicator of US activity. This showed a rate of 59.7, which is a little bit better than expected, falling from 60. But most importantly, it showed the 10th month of above 50, which usually correlates with higher growth. And the ISM suggesting that at these current levels, that US growth is travelling well above trend at 6% per annum. So it reinforces really the theme that the data that's coming out of over the last month has been generally positive. The Chinese PMI, equivalent to the US ISM, did fall yesterday down to 52.7, down to 11-month lows. But I think generally this is good news overall. It demonstrates that the tightening property measures that they put in place in late April having desired effect, and probably keep them from having to tighten more aggressive later in the year. So the theme is still that the data has not deteriorated greatly, even though we've had that equity shock in May. Obviously, we still need another 60 days to work out whether there are real impacts here. But overall, it's still okay. The market rallied on the ISM with the S&P 500 up around 1,090, but fell away late in the session on capitulation type selling in BP petroleum and associated stocks in the US. Again, the oil spills continuing to poison the Gulf area of the US, and there doesn't seem to be an immediate solution. This is leading at the moment to potential criminal charges against BP, and the market sold off aggressively into the New York close this morning at around 6 a.m. Sydney time, down to 10,070, noting that the S&P 500 hit 1,040 lows last Tuesday night, and still that 1,080 area is proving pivotal after it closed just above 1,100 area on the last week. Okay, on the day ahead, Australian dollar looks like it's holding support at 82.80 ahead of March quarter GDP numbers this morning. Unless the numbers well above 0.6, though, the market's probably not going to derive a lot of benefit from it at this point. We've got a mixture in the components of that number of government investment spending is going to be strong in the numbers, consumption mild, private investment not that strong either, net exports a little bit of a drain, and inventories are positive for the GDP numbers. So looking at growth around 2.7% on an annual basis, RBA and Treasury are looking for above 3% through the rest of the year, on the expectation that the private sector comes back in a stronger way. So thanks for joining us, and we'll speak tonight.